Operating Officer, who will provide an update on the existing portfolio and operations since we last spoke in early February, I think it was. Since we last spoke, as I already mentioned, we've had 3 significant development milestones. First one being Graham Martin's appointment to our board as non-executive chairman. For those of you who are not familiar with Graham, he has worked for Tullow Oil since its inception in 1986. He joined the board of Tullow in 1997 and retired in 2016. So he was 2 decades on Tullow's board, and he led their entire M&A program during that time. And what made Graham's appointment such a good fit for the company was that he rode the Tullow story from literally its inception right up to a FTSE 100. Not only that, we know him well from our time together with Tullow, and he comes on board to act as a facilitator to us to help us grow the company, build the company, and create as much value as we can for our shareholders. Second development milestone is adding Coulter and Acle to the portfolio. Those licenses were in place the last time we spoke on a call like this, but what's happened since then is we've firmed up budgets, work programs, including a seismic acquisition in Italy, and we've also commenced our 3D seismic acquisition in Jamaica with Tullow Oil. John will go into a bit more detail on those in a few minutes. And then the third significant development milestone for the company is we completed a placing last week for £2.5 million, which is subject to shareholder approval. But we're really pleased to get that done. Prior to the placing, we had 1.7 million in cash. I know the RNS specifically outlined funding for Jamaica and Coulter, but beyond those, there is additional cash available for us to now get on and grow the business and develop the portfolio. We've always said we'd go back to the market when we can, not when we have to, and given that with a strong cash position, it made sense to go back, do a top-up now, and continue to ensure that the business is well supported financially, and that we can continue to look at other opportunities to add to the portfolio. So, moving forward, the focus for us over the next 6 to 12 months is to continue to develop the portfolio. We will complete the 3D seismic acquisition in Jamaica. We will start well planning and long lead planning. Well, I guess it's coming shortly, planning now for the Coulter well, along with looking to develop Watercross in onshore UK, and planning for our 3D seismic acquisition onshore Italy and the exploration piece of our acreage there. Alongside that, we're going to continue to broaden our investor relations outlook. We're going to continue to build on the relationships that we've established most recently among the investor community in London. And we're going to continue to look at new opportunities, as I said, to build the portfolio and to add other opportunities and other licenses, both in Europe and further afield. So it's probably appropriate now to hand over to John to run through the licenses themselves.
Sure, thanks, Brian. Thanks. So yeah, I'll go through the licenses. I'll go through all the licenses we have. I mean, before starting, first of all, to give an overview of the strategy we're pursuing and just remind everybody of that. So in Europe, we're really trying to get involved in low-risk opportunities where there's going to be near-term activity and where that near-term activity is going to lead clearly to production and cash flow. And then use the growth and cash flows from that European business basically to underpin what we want to do in countries like Latin America, the Caribbean and Africa, where we're really trying to get after high-risk, high-reward opportunities where there's really these kind of super wildcat things, which is where our Jamaica license really fits in. So I'll start off with the European portfolio and then finish up with giving you the overview of where we're currently at with Jamaica. So in Europe, we are involved in Italy as well as a number of licenses in the UK. In Italy, we're in the Podere Galena license, where we hold a 20% non-operated stake. We drilled a well there in November, December last year. That well, as many of you may be well aware, came in very well. Found about 41 meters in that gas play with 2 different reservoirs. But the best part of it was with mean recoverable resources of about 18 BCF or 3 million barrels. And all the numbers I'm quoting, by the way, in this through a competent person's report, so they're all essentially independently audited numbers. So 18 BCF in the field, but more importantly than that, it actually had higher pressures than we expected and tested at better rates than we were expecting. So the rates from the lower reservoir were more or less about 850 barrels of oil equivalent per day. It's a gas well that is converting it for consistency across. And the upper reservoir produced at around about 750 barrels of oil equivalent per day. So what we have there is a clearly commercial discovery, which we are looking to bring on to production as quickly as we can. We're currently going through all the process that has to happen to get that into development. The license is in the Eastern Po Valley area. It's an area that has a lot of infrastructure. It's had a gas industry there since the 1950s. So it's actually very simple to tie this up. It's only 400 metre tie-in to get it into the gas infrastructure. So in terms of costs, it's pretty low cost to bring this on stream. And in theory, we could actually have had it on stream by now. But we go through the process of converting the license from an exploration license into an exploitation license. And in Italy, that takes time. So looking at an 18-month lead time, we're expecting first production from this to be towards the end of 2019. When that comes on stream, the net cash flow to us pre-tax is likely to be, based on the numbers we've got from the tests, results in excess of $2 million per year. So pretty nice asset to have. We're just pushing that as hard as we can in order to bring that on stream as quickly as possible. And the operator Po Valley there, they have a very good relationship with the Italian authorities. They're based in Italy, and they have a proven track record of bringing things from discovery through to production. So we're very confident that they will be moving that forward as quickly as possible. What the well results did do, and what we have also been working on and had a partner meeting last week to look into, was it de-risked a lot of the other things and other prospects that have been identified within the same license. So what we now want to do as a partnership is get after those as quickly as possible. So we had always intended to do a 3D seismic acquisition across this area, including across the structure that's been drilled by the well, but also to cover some of the prospectivity down to the south and east of that, but still within the license. So that 3D seismic, we're now looking to accelerate, potentially doing it later this year. These reservoirs in this area, they're very good quality. They're quite shallow, so when they're filled with gas, they light up on the seismic really obviously. So when we have this 3D, this good quality, well, I've been saying this to Brian, but basically my 3-year-old daughter would be able to actually spot where the gas is in these things. So we won't even need a geologist to show where these things are. It will be really obvious, and we'll really de-risk these structures. So we want to get after those as quickly as possible. And at present, we see the East Delta prospect, which has potentially 35 BCF, or twice the size of the gas we've discovered in the well we drilled at the end of last year. So clear materiality there. At the partner meeting we had last week, we were also discussing another prospect called Ricardina, which we haven't really been pushing before, or hasn't really been on our radar, but that could be even larger than East Selva. So again, we're looking at getting after those things. There is significant materiality on the block. And the really nice thing is, once we get that exploitation concession, which is what takes the 18 months, we won't have to go through that process again. All of these structures will be within that concession. So as soon as we drill the well, if we make a discovery, we'll be able to hook it back up to the facilities at the Selva field very, very quickly. So it's a really exciting area with significant materiality that we are doing our best to get after as quickly as possible, in addition to the really good well result that we have there. So that's Italy. In Europe, we have a number of licenses in the UK, and most of these are in the Wessex Basin. So moving across now to the Wessex Basin, the reason we like that area so much, and the reason we have a number of licenses there, is pretty simple. It's the Witch Farm field. So the Witch Farm field is the largest onshore field in Europe, 500 million barrels of oil within it. But when you look at the area, there's no other field anywhere near that size in the same basin. So the next biggest field is about 6 million barrels. So if you look at any distribution in nature, or any distribution in any basin in the world of oil fields, you would expect there to be a number of oil fields spanning that gap between 6 and 500 million barrels, and those have not yet been found. When we started looking at this a few years ago, you could really start to see why. The witch farm play is quite deep. The structures are not very easy to image on seismic data. So when you look at the wells that have been drilled in the area, they've either been drilled off structure because it's hard to image the structures, or they've actually gone for very obvious structures, which are the wrong thing to target because they tend to have moved recently, which means any oil in them has subsequently leaked out. So our approach has been to really do everything we can with the seismic data, get 3D seismic data, and then work that to identify where we've got the most robust structures. So we've been doing that in our onshore license PL090. We're working at prospects on the seismic data at the moment on that. And the reason we farmed into the Coulter well was because that was the same approach that Corallian had taken to identify and really define. So the Coulter well, we farmed in for a 10% stake back in January, paying 13.33% of the well costs, with an option stake of further 10% at the same terms. The structure itself lies immediately to the south. It's a structure immediately to the south of Witch Farm. There was a well drilled on it in 1986. The well found a 10-metre oil column and actually recovered oil to the surface. Now, what the seismic data that Corallian have worked up clearly show is that that well is right on the edge of a much larger structure. In fact, you've got about 100 metres more potential for oil column above that where the well penetrated the structure, and the structure extends for 5-10 kilometres in an east-west direction. So the plan is to drill an appraisal well up dip of that existing well. We're carrying this case volume from the structure of 19 million barrels, which is really a conservative view. I know that Corallian are holding higher volumes, and so when we have an upside that goes way above 40 million barrels, and I actually think in this case, sometimes upside can be a little bit nebulous. In this case, that upside is very, very realisable, and we're being quite conservative with our estimates. It's very low risk. It's got a well already in it, so it's essentially appraisal. And so the only risk really is around finding commerciality. And as in this area, we think, the minimum commercial field size is around about 6 or 7 million barrels. Even if you get towards the lower end of our distribution, this thing should be clearly economic. So the plan is to drill a well on that in Q2, Q3. It will be drilled by a jack-up rig. So in the offshore, well costs around about just over $9 million. But the development, given how close it is to Witch Farm, you can actually reach this with an extended reach well from the existing Witch Farm facilities. So the obvious route for development would be through the existing Witch Farm facilities. So given a success in that well, that would be the route we'd be looking into. And there's already been, my understanding is there's already been high-level talks between the operator Corallian and Perenco who operate Witch Farm facilities. So we've got that. We're chasing the same Witch Farm play elsewhere into the onshore, as I said, in PL090. We have an AMI agreed with Corallian as well to get after that in blocks around that area. And those are things that we'll be working up throughout the rest of this year. So the earliest drilling on any of those would be well into 2019. In that same area, we also have the Water Cross field. That's a field that was in production from 2013 to 2014. It was produced by a single well with very high water cuts. But when again looking at the data and really getting what we can from it, you can clearly see that well again was right at the edge of the structure, very close to the water contact, and the crest of it actually lies up to the north. There's been modelling. Even if you get 10 metres further above the water contact, you could actually get rates of 200 barrels per day out of this thing. So we've been working the data in order to optimise the well location and make sure it is going into the crest. That work is still ongoing. We expect it to be completed by the end of May. As it's an existing field, there's a site already in place and there's permission to do 2 wells to be drilled from that site. So once we basically have the well design finalised, it should be a very straightforward process to go from that towards actually drilling the well. We're looking at about a 6-month lead time. So potentially that is something that still could be drilled before the end of the year. Again, the facilities are there. It'd be very straightforward to actually put that onto production. Oil would be transported by trucking. So, we could be looking at cash flows from that fairly early in 2019. And again, the cash flows from that, 200 barrels per day, our net share in that, which is 26.25%. would be round about $1 billion per year net to us. So activity coming up right across the Wessex Basin. The only other license we have in the UK is in the southern North Sea. So a slight move away from the Wessex Basin, but it was a really good opportunity that we became aware of, that we were very keen to be involved in. We've taken an option on Block 4929C, which includes the Acre prospect, to take 24%, paying 30% of the well. And that option is executable upon basically a commitment to drill the well being made, which will be subject to finding funding for the remaining 70%. The reason we like it so much is it sits right in the middle of the Larkin play fairway. It's near a number of other fields. It's near infrastructure, an infrastructure that has a good lifespan ahead of it. And it's a clear four-way dip closure, which has got material volumes associated with it. So we're looking at 120 BCF mean case recoverable volumes, which is about 20 million barrels of oil equivalent. And it's, given its location, given the definition of structure, it's a very low-risk exploration well, which is why we're keen to be involved in that. So that's basically a very quick summary of the European assets. As you can see, there's good potential for strong growth in a number of those areas, particularly in the Colter well that is coming up, and in the upside potential around the Italian discovery. But then moving across to Jamaica, and Jamaica's a very different kettle of fish. It is really this super wildcat opportunity. It has got absolutely transformational potential for the company. We farmed into it in November 2017, so November of last year. So we have 20% share, and the other 80% is held by Tullow Oil. Tullow got into it in 2014, and since they got into it, they've done a lot of work acquiring seismic data, purchasing existing seismic data, doing field work on the onshore, and looking for oil seeps across the area. They've spent to date over $20 million on the license, which we have effectively benefited from for free. The deal we've done is to come in on essentially ground floor terms, funding 20% of the 3D seismic that is currently underway. The reason we like it so much is just there are so many positive indications that there is a working hydrocarbon system here. All the work that's been done by Tullow over the last 4 years has served to de-risk those areas further. The seismic has shown there's a lot of structures to get after in the offshore area. They've shown that there's mature source rock there. The work onshore has shown us that source rock has shown us good candidates for reservoir. So, everything that's come out has essentially been good news. And now we're moving forward to this 3D seismic, which we're funding 20% of. The 3D seismic is centered over the high-graded lead, which is called Colibri. So Colibri is not the largest lead, but it is in the best place to actually test the play. So just to the north of Colibri, you have oil being generated, and just to the south of it, you have an active oil seep. So the way that the pathway that's being modelled to get to the oil seep is coming through the middle of this prospect. So it's the best chance to actually show that this play works in Jamaica. Having said it's not the biggest, Colibri still has mean recoverable resources of 219 million barrels of oil. So it is a material prospect. And again, the reason we get so excited about Jamaica is the acreage position is huge. It's over 30,000 square kilometres, and within that acreage, there are at least another 15, maybe even 20 structures which are at least as large as Colibri, if not larger. And all of those structures, if Colibri comes in, will be de-risked. So it really, it's this idea that we are working towards a basin opening well that is not just going to uncover a single standalone prospect, which on its own will look very material, but it just opens up the whole basin and all the potential that's there. So we're currently at 20%. The seismic started, the acquisition kicked off at the beginning of April. It's gone very well so far. It's had nothing to delay it whatsoever, so we're currently slightly ahead of schedule. Over 70% of it has been acquired so far, and we're expecting it to be completed within the next 2 weeks. Once it's completed, we'll get fast-track volumes of the data, which will give us a better imaging of the Colibri lead and allow us to do some work on that and begin the de-risking process on it. We expect to get final data sets before the end of the year, and once we have those and interpreted them, we will start a joint venture farm down, or at least that's the current plan, start a joint venture farm down with Tullow to get someone in to fund the well. So to access what could be multiple billions of barrels, our entire exposure, given we follow that through and actually take the farm down and carry on any well, would be just the cost of acquiring the seismic data. And the well itself, it's not, it is relative, it's 750 metres water depth, it's about 2,000 metres overburden, so we're looking at well costs of about $35 million. So it's not super expensive drilling either. So I think that's a probably fairly quick overview of all the assets that we have. So I'll pass you back to Brian.
Yeah, just to add another point on Jamaica, following on from what John mentioned, just in terms of putting some numbers and some context on it. Jamaica will probably cost us about £2 million sterling before we drill the well. If that well isn't a success, there has been an independent analyst valuation put on that target net to United Oil and Gas, assuming we're at 10% of $60 million, and that's based on a flat commodity price assumption. So in terms of return on cash and that kind of managing that risk reward, we see Jamaica as a perfect fit for our business. And if Jamaica wasn't to come in, the business wouldn't fall over because the European piece of the business is still growing strong. And I think as we look to move the company forward and the story forward, it's not going to happen overnight, but certainly over the next 2 years, we'd like to add a couple of more of these opportunities into the portfolio, so that we're eventually drilling a super wildcat opportunity once every 12 to 18 months, preferably funded from the development of the European business. So, one thing that I get asked a lot about, just moving on a little bit, is new opportunities and adding to the portfolio and new acquisitions. And I think we've been fairly consistent in that. If you look at what we've done in the last 8 or 9 months since we listed, we've added 5 more licenses into the portfolio, which is probably one, on average, it's one every 6 to 8 weeks. Now, being realistic, that's not particularly sustainable over a longer period, because what we don't want to do is build a portfolio of 25, 30 licenses that we just can't extract value from. But what we are continuing to do is look at other opportunities to add to the portfolio. Some of them might be corporate. Some of them are portfolio acquisitions, and we'll continue to look at those. They take a lot of time to work through. It takes a lot of time to complete these evaluations, but we will continue to do that. We'll continue to look at creating as much value as we can from the existing portfolio and adding to the existing portfolio. What we prefer to do, as we've always said, when we are looking at new opportunities, is to target off-market transactions. So transactions where, opportunities are not been marketed publicly, because in our experience, if an opportunity has been marketed publicly, there's more than 1 or 2 people looking at it, and it can invariably become a bidding process. And in a bidding process or an auction, you invariably overpay. So what we prefer to do is target concepts or ideas that we feel will create value for our shareholders. It takes a little bit longer to do that, but I think over the longer term it will create much more value in the share price and for the shareholders. We don't like to say too much more. I wouldn't like to say too much more about new opportunities or anything like that, because what we don't want to do is concede any commercial high ground that we may have in negotiations when we're looking at opportunities. And I think that probably covers everything. So, Darren, we're happy to take some Q&A.
Okay, thanks, Brian. So for anyone who would like to ask a question, just a reminder, #1, and you can then ask a question.
Hello? Hello?
Hello?
Hello, Brian. Val?
Hi.
Hello. Got a question. You probably covered some of it now in your last So I'll just reformulate the question then. You talk about acquiring potential exploration and production assets. What would be your preferential assets to acquire at this moment in time? And also, since Graham Martin has joined the company, how active has he been in helping you guys seek new assets or helping in negotiations to acquire something new in the near future?
Okay, we'll just I'll answer the first bit first. Exploration versus production. In terms of opportunities, our objective is to create as much value as we can in the share price. Each opportunity we look at, we evaluate as a standalone. Where is the value driver? How can we monetize the asset? And that's what we look to do. So we look at both. Exploration is predominantly kind of the outside of Europe. We do look at exploration within Europe, but for the bigger bang stuff, it's predominantly outside of Europe. And then near-term activity, low risk, appraisal, redevelopment projects we tend to be European focused in that regard. So we each opportunity we look at is on a standalone basis, we have assets that are very close to production. Sometimes bringing an asset into production isn't necessarily the right thing to do. The right thing to do might actually be to invest, and we'll make decisions on that as the portfolio grows and evolves.
Mm-hmm.
Regarding Graham's appointment, Graham was looking over our shoulder, I guess, or advising us in some capacity from the tail end of last year, and we only formalised his appointment, I think, in January, February time. But in terms of Graham's role, Graham is our non-executive chairman. He has a huge amount of experience, not only in merger and acquisitions, but also in divestments, which will help us manage our portfolio. And his role really is, as any non-executive chairman, is to be a facilitator, to make sure that the decisions the board are making are robustly discussed and are considered properly. And, Graham has so much experience in the industry. He's a vast array of contacts which can help us source opportunities. And not only that, Graham has been extremely helpful in structuring deals and providing advice to both John and I since the inception of United, essentially.
Yeah.
All right. Okay. Thank you. What would be your preference? Would you be looking to acquire an offshore or an onshore asset?
Again, it comes back down to each individual project. We assess them on standalone. I mean, we have some offshore acreage, obviously, with Coulter. We have the Acle prospect in the southern North Sea is offshore, and Jamaica is offshore. And then we have a mix of onshore, both Italy and in the UK. So it really comes down to, what value can we create from this license? Does it fit with what we can do technically? Can we create value for our shareholders? How do we monetize the asset? So it's all of those things that we consider when we're looking at opportunities, and it really comes down to each one on a standalone basis.
Okay. So obviously you had a recent fundraise of £2.5 million. So let's say you look in two or three different assets that might be of interest to the company that you believe would have significant value. So would the company be looking to use a different method of funding rather than just a placing? So would you be looking at either like a paper purchase or a debt facility or something similar, so that you keep the dilution to the minimum, but in the meantime have significant value without diluting shareholders, but having another facility that you can tap in the future to fund other assets or the current assets that you have right now?
Well, again, I guess every opportunity you look at, you evaluate as a standalone, but some opportunities suit debt, some opportunities suit paper, and some opportunities will better suit equity. And right now, with the current placing done, we have sufficient cash in the bank to develop the existing assets. That's the primary focus in the short and medium term, is develop what we've got. And we have some fuel in the tank if we wanted to go and do something else. And then we're looking at opportunities not too dissimilar from Jamaica in terms of commercial terms where they're ground floor, so potentially no cash up front, but gives us an opportunity to add something to the portfolio and, consider funding maybe further down the road for a development. But essentially, it really does come down to each individual asset and assessing what's the best funding and considering how can we structure this to create as much value as we possibly can, avoid dilution where all possible, and potentially use things like paper and certainly debt at the appropriate time.
Yeah.
Okay. All right. Thanks so much.
Okay.
I may have another question about Jamaica, if that's okay, if no one else is about to ask.
Yep, sure.
So the 3D seismic will essentially finish in a couple of weeks' time. So once you acquired all the data, how long would it take for you and Tulu to process the data and come back to the market for either CPR or like a preliminary result of the 3D?
John, do you want to handle that one? Do you want to take that question?
Yeah, sure. I mean, so we have, the high-grade prospect Calibri, that has been covered by quite a lot of 2D data. And the numbers we're quoting on that of nearly 220 million barrels, mean resources, that comes from a CPR that's being done by ERC Equipoise. So the 3D data, we will get a fast-track volume, probably fairly soon after completion, so we should have that by June, which we will start interpretation on straight away. So we will start to get an idea of, what the structure looks like when we have that better quality data. And as well as that, it's 2,250 square kilometers. So there's other structures within that area as well. So it'll be interesting to see how those look on the new data as well. So, we won't just be focusing on Calibri. The issue is that is an interim volume. It's not a final volume. As much as we will have, a much better idea internally, there'll be further work, and what tends to happen is what you see from that volume will feed into later iterations of the data, so you end up with a data set that is as good as it can be. We're not expecting that data set until probably November time. So in terms of actually getting an updated CPR, it will probably be, end of the year before we've been in a position to look to do that. But we should have a better idea internally, and we'll start to, already talk to, potential farminees that we'd be looking to warm up ahead of any farm down effort in early 2019. So that will be the process, and that it will take a bit of time, but we should have a much clearer idea on the prospectivity of that area as a whole, hopefully, by the end of the summer.
Okay, all right, thanks so much.
Jonathan, I have a question. It's Darren here. Just off the back of what Bale was asking there. If you have a final data set, say November, December, sort of in layman's terms, I'm not an oil and gas expert, but if you have a final data set, what level of de-risking does that do to the prospect? You say about talking about farming down. Does it give you? Is it sort of like yes or no at that stage, or is it? How much does it de-risk moving forwards?
So at the moment on the 2D data and all the work that has been done, the Calibri prospect still holds a chance of success of about 16% currently, and that's because it is a frontier area. There's been no, there's very little data. There's only been one well drilled in that sort of offshore basin where this prospect sits, and that was drilled in a very different area of it. So there's a lot of unknowns there that we're trying to, reduce the uncertainty on. So what the 3D will specifically address, it will specifically address the structure, so we'll get a much better idea of the shape, of the size of the structure, exactly how it's defined around the edges, and the best place to site a well on it. So there'll be structural elements that will be de-risked. The other thing that will be de-risked will be reservoir, because again, what you really hope to see from the 3D seismic is much more clarity in the seismic data of the responses, and you can then tie those responses into what your candidates for the reservoirs are going to be. So with de-risking on the reservoir and the structure, you could probably double that chance of success. So, and to get to 30% chance of success in what is a frontier basin, is about as good as you can get, because there's still so many unknowns that, I would feel uncomfortable if someone started suggesting you've got 50%. So if we really like it, you're still going to have a 1 in 3 chance of success. But on the back of that, when you consider that we've got 200 million barrels plus recoverable resources there, and it's the best place to test the play and potentially unlock billions of barrels. If you end up with a 1 in 3 chance of success in that, you'd be falling over yourself to drill it, really.
Yeah. So if you just get another 2 deals like Jamaica, we should make a hit, yeah?
If only it was that simple.
You're bringing me back to my statistics classes at school. I'm not. I don't think it works like that. But that's why we want to have more than one. That's why we want to add them to the portfolio, because the more times you throw your hat in the ring in these things, the better the chances you're going to have that success. And you drill one, you get it first time, fantastic. You keep doing these things. You do them with low capex exposure, like we're trying to do. You underpin them with strongly growing business in Europe. One of these comes in, it is transformational. So yeah, we are actively looking for further opportunities like this to get involved in.
Great. The other point is just like to add on Jamaica is we're talking about this farm down. That's the intention right now as of today. However, when we have the final seismic pack later this year, we'll make a decision as to whether or not we want to stay in this for 20%. The well costs are reasonably low considering they're gross $35 million, and we'll make a decision on whether we stay at 20% or drop to 10% later this year. Later this year. Right now our intention would probably be to drop to 10%, but we'd make a decision on that when we assess our balance sheet and our cash position and what we feel is achievable in terms of our cash position, essentially. Any more questions?
So one is on the Jamaica prospect. Obviously you mentioned it's Wildcat. One of the recent studies with CGG on the geoscience consultants have noted in relation to onshore Jamaica, they've come across some initial oil seams and done some basic initial tests there. Is there discussion or potential to look at onshore Jamaica as well?
We the work that CGG's done is very encouraging, and it actually reproduces or kind of is running parallel to show the same things a lot of the work that Tullow has done. So they have found seeps onshore, which they have typed those to Cretaceous source rocks. In the offshore, those Cretaceous source rocks are also present, and there are seeps as well that have been identified in the offshore that Tullow identified. So the reason that we really like the onshore is because, first of all, the structures are simpler, so you can actually see the big structures. You've got the onshore. The reason it's there is because it has popped up as you've had compression. So there's quite a lot of much more recent movement, and a lot of these structures are being moved. We also like the onshore because the best quality source rocks that have been shown in the onshore area are in the Eocene, which are the younger formation in the Cretaceous. They tend to sit shallow. Those source rocks, they're not mature in the onshore, but they are mature in the offshore. So we want, again, the offshore maximises your chances in that you've got potential Cretaceous oil, you've got potential Eocene oil. So we think we've got better chance of actually accessing the source rock in the offshore as well. So that's why, to us, I just think the offshore is where that real big bang potential is. And that's why I think Tullow got into the license there. That's why they've got such a large position across that offshore, and that's where the focus has been. The reason the onshore has been looked at in such detail is because it really does provide, it's the same rocks as you see in the offshore. They're just being uplifted more. So you can actually get a really good idea of what you're seeing or what we're expecting to find in the offshore by looking at the geology in detail on the onshore of Jamaica. So that's why quite a lot of the work has been done onshore. And again, the work that CGG did, we actually met with them a couple of days ago, and it's all in line with the findings that Tullow had, which is essentially really encouraging for there being oil present.
And then secondly, just in terms of the longer term strategy, is it, focusing on having stable, cash generating, low risk prospects onshore with a view to acquiring more of the higher risk potential wildcats such as Jamaica as well?
I think the story is naturally going to evolve. The company is naturally going to evolve, and our strategy has to evolve. If we keep doing the same thing, we'll actually start going backwards. So naturally, the strategy will evolve as the company grows. However, I go back to the point I made earlier. I mean, our job is to deliver shareholder value in the share price, and sometimes that will mean bringing assets into production. Sometimes it will mean divesting assets, and really the goal is to create as much value as we can in our share price, and we'll make decisions on the portfolio as the business grows and as the portfolio develops.
And if Jamaica doesn't come off, the impact on the investment there, is that likely to have a big impact on plans going forward?
No, ultimately that's one of the things that we like about the portfolio that we're trying to manage as tight as we can. It's the risk reward. If Jamaica doesn't come in, the business doesn't fall over. We get on with life. We've got a fantastic portfolio in Europe that we're very proud of, that we really like. We've got the Conquer well coming up. We've got potentially Water Cross well coming up towards the end of the year. We're shooting seismic in Italy to get after the exploration next year. So if the likely event that if Jamaica doesn't come in, there will be the European business will continue to grow, and hopefully by the time we go to drill Jamaica, we've one or two more similar assets to it in the hopper.
Yeah. So fingers crossed for Jamaica then.
Yeah, absolutely.
Super. And in terms of just timelines, in terms of you mentioned the 3D seismic coming in in the short term, the likelihood of the potential 3D results. When will you show that to market roughly in terms of saying whether there's some positive results from the 3D or whether it's not so positive?
John?
Yeah. It's one of those. I'd be reluctant to put an exact date on it, and especially given anything we share with the market, we will have to discuss with Tullow, who are obviously the operator. We don't want to be putting things out prematurely. I personally, once we have a fast track volume and some numbers on that, I'd be keen to update, put some updates out there, whether it's just through our website, or just another call like this, giving some intermediate estimates of how it's going. And that'd be over the summer, end of the summer, I guess. But again, that's what I personally would like to do. Whether we after discussing with Tullow whether they're comfortable with that, we'll have to wait and see. So I don't want to make any promises that we will be having a definite an output, but that's kind of what we'd be aiming to do, I think.
Okay. And then once you have that and it looks positive, would it be around this year that you'd start looking at plans to drill a few test wells, in 2018? Would that decision be made this year?
No, so any decision on drilling would have to wait for the final volume, which will, as I said, probably be towards the end of the year before that's ready. Interpretation would be done on that, at which point, as Brian referred to earlier, we have a decision to make as to whether we want to participate, actually just stay at 20% for the drilling. Well costs around $35 million, so we want to make sure the well, going in the right place. So there'll be quite a bit of work on that, and then the lead time into drilling. So drilling at the earliest is going to be, towards the end of 2019, probably into 2020. So it'd be, you drill that one well, that proves up the concept. If it comes in well, you've proved up a large volume in the Calibre prospect, plus you've de-risked the entire offshore of Jamaica, which is just a huge area to get after the follow-on potential. And at that stage, once the well results have come in, we then have another decision to make, which is, do we stay in there for further drilling and see it through, or do we, I'm sure if it came in well, there would be numerous companies biting our arm off to try and get involved and buy our stake in them.
Yeah. Alrighty, thank you.
Hi Brian, it's Wayne Gibson here.
How are you?
Yeah, not too bad, thank you. I just want to focus a bit more on the near-term activities with Coulter, really. Obviously, we're approaching the summer period, and would the summer period likely affect any? Well, once the drill is drilled, would there be a gap period if we had to go back in and test it due to the summer months?
Yeah, I think in the first RNS when we announced the deal, we had said that we planned on spudding the well in May, and that was based on guidance we'd been given by the operator. Now since we RNS'd the deal, we've always said, in our view, it will be Q2, Q3. Now, we can't drill through the summer periods because it's the tourist season. So the last thing we want to do is start drilling a well in May and find that we're only 3/4 of the way through the work program and we have to pull out the tool and down tools essentially because we've hit the summer season. So our preference, United's preference has always been to drill the well actually in September. Now obviously, it's the 26th of April today, so we're getting close to a decision on it. My sense is at this stage it's most likely the well will be drilled in September. We're happier about that because it ensures that we have enough time to get everything that we want done and to not risk running out of time because of the holiday season.
Yeah. And I don't know whether you can speak for the other JV partners, but has there been discussions with, obviously, the major player down there being Perenco on if Coulter, when Coulter is successful, would then Perenco come in with some sort of offer to take, to speak to all the JV partners and take on that investment, obviously at a multiple to what you guys paid for it? So I don't think it's not a secret, is it, amongst the different players in there? So I've seen, like, Raybold, who are down there, they've mentioned that Perenco could come in as well.
Well, Perenco are not an explorer, they're a producer, and they are the operator of Witch Farm. There is spare capacity in Witch Farm. It would make sense for them to want this if it was a success, simply because, they have spare capacity, and it also defers any abandonment on Witch Farm, and it keeps Witch Farm in business, essentially. There has been some high-level conversations between the operator and Perenco, and I guess, there's obviously an interest. It would obviously make sense. And to be honest, that's one of the things that attracted us to the license in the first instance. Not only technically did it stack up, but commercially, we farmed in Q1, we'll drill a well, most likely now Q3. And, if it's a success, we could be looking at our options in Q4, Q1 of next year. So it's a nice turnaround. The CapEx exposure is not huge. And we think that it's going to be a fantastic success. We're very excited about it, and we really, really like the potential of the license. And there is that potential exit.
Yeah. Would you be? You probably can't answer it, but would you be expecting 5-10 times the investment that you put into it? Because obviously you've only got 10% at the moment. There's an option still to take 20.
Yeah, it's kind of. It all depends on the result of the drill bit, really,
yeah.
and what's discovered. As John says, it could be potentially 20 million barrels recoverable. We have that supported by a CPR, a competence persons report, but it really depends on the outcome of the well as to what it could be potentially.
I would say if you say you took it at the current stake of 10% and it came in the mid case 20 million barrels, you'd be looking at probably $20 million NPV. So 10, 15 times money.
Yeah, and Perenco have got vast amounts of disposable cash to throw into a producer like that, haven't they?
Yeah, Perenco have quite a bit of money, all right, yeah.
Yeah. Okay, thank you, guys.
You're welcome. Any more questions?
Yeah, Brian, are you going to take on the extra 10% in Coulter?
Well, we've been asked that a few times this week. I guess at this stage, we'll review that as part of our ongoing strategy. We have a bit more time on it. We feel we have a good opportunity percentage that we've got. The funds that we've raised allow us to get on and drill that. But we will determine our priorities in the next couple of weeks. but we remain really, really excited about the prospect. We really like it. We've obviously got one pot of cash. There's only so much you can do with that, and you want to spread the risk across the portfolio, and you also have to measure that against what other potential transactions could be in the hopper. So we feel we will make a decision on that shortly.
Yeah, understood that. Yeah, that's what I was thinking. Because obviously, if you take the extra 10%, then obviously it leaves a bit left in the pot to acquire anything else you've got in mind, I suppose. Yeah, that makes sense.
Yeah.
Will there be a copy of this recording of this call available through the website later, please?
Yeah, we'll try and get one up. Yeah, we'll try and get that uploaded onto our website.
That'd be very good for the latecomers. Thank you.
No problem.
I was just going to say...
Please hold.
I don't know who did that. Can you hear me?
Yep.
Yep. I was just going to say we're sort of getting towards the end of the call now, so I don't know if there's any sort of further questions or from anyone. If they have, just holler now.
If I could ask one about the ACL prospect and what the plan or the timelines are around that one, because I think it's kind of under noticed at the moment.
John, do you want to take that one?
Yeah, sure. So ACL, so we did the farm in January time. The license, as is held, so the current administrator of it is Swift Exploration. Now they're a small promote company, so they are looking to get other companies involved. When they first went, because there's a number of companies in the infrastructure around there involved in the field who would be very obvious candidates to come in, but they were unwilling to come in at 100% level, which is where we really saw the opportunity. A, because we really liked the prospect, and B, because we could see the opportunity to come in at an equity level that suits us, but which could kickstart and really prod the other companies around that area to actually get involved as well. So Swift Exploration, they're leading all those conversations. Our understanding is they've had, since we did the farming, they've had about 5 or 6 interested parties talking to them about taking or funding the remaining 70% of that well. The first, Swift Exploration have to give an update to the OGA, the Authority of the UK, in June to show that there's been progress made in terms of farming. So we're expecting the first update on that to be in June time. And then the license actually doesn't expire until November. So the option potentially carries on until November, but we're expecting an update in June. We'll see what comes from that. Hopefully at that stage we will have other partners, at which point we can start the well planning and start looking towards getting a well together for 2019 on the ACL prospect.
Very good. Thank you, sir.
Okay. Any further questions? I think that's probably it, Brian.
Great stuff. Thank you, everybody, for your time.
Thanks so much, guys.
Thanks everyone. Appreciate it.